Thank you, Robbie. I greatly appreciate you taking the time with us today.
Yes, thank you. Thanks for having me.
What does it say up there? It's got Managing Director and Head of Digital Assets, so that's good. It matches what I've got here.
Perfect.
You've been with Blackrock for 6 years. It would be, I guess you've been in the fortunate position to really be in the middle of this massive change for a really key period of time. Would be really interesting if we can just kick off with, well, actually, first of all, just to say we've only got 20 minutes, and I'd really like to leave some time for Q&A. So if everybody can think about anything you want to ask, I will make sure there is time for at least a few questions. But okay, to kick off, it would be really interesting to understand the journey you've been on in those 6 years, you and Blackrock, and maybe some watershed moments, just to set the scene.
Yeah, well, I think the firm really started kind of 2016 timeframe to look at this space, and that predates my time there. I joined in 2018 as the first full-time employee in the space. And in those early years, we were, I think, very much focused on sort of enterprise blockchain type applications, ways we could use the technology. There really was not a lot of comfort at that time with crypto. Tokenization wasn't something that people were really talking about. But some of that early exploration work, even though enterprise blockchain has certainly been deprecated as a focus for us since, and you haven't seen a lot of those use cases really bear fruit, was nonetheless valuable in terms of our learning and our building of comfort and conviction in this technology. So then you fast forward to kind of 2020, 21 timeframe, and crypto enters its fourth bull market. And that started to really drive a lot of client interest. It started to drive interest from some of our investment teams. The regulatory attitude, you could see, was softening in a lot of jurisdictions, becoming more open, more interested in this. And then the state of institutional infrastructure, which maybe that's arguably the most important part of being able to provide comfort and conviction to us that we could build Blackrock quality products and solutions in this space. That really came a long way on the back of some of the venture and other funding that came into this space. So when you put all those together, that led us to the series of steps that we've seen today, whether that's as a crypto asset manager, as a player in the stablecoin space, as a reserve manager and partner to Circle, and now as a player in the tokenization space.
Okay, and you've effectively got a leadership position in at least a part of this market. What do you think are the key factors that have enabled Blackrock to take this leadership position?
Yeah, I think the nature of our platform has been the most critical thing, where people think of Blackrock as the largest asset manager in the world, sure, but it is also a very significant technology provider through our Aladdin investment management system. And that's highly complementary with what we do on the asset management side, because it underpins the technology and the operational process throughout the investment lifecycle, not just for Blackrock, but for many large buy-side firms. And so the things that we've done in this space have benefited from that duality as a asset manager and a technology provider, as well as the breadth of asset classes that we cover. And so you think about being a crypto asset manager, well, a lot of that was supported by investments we made to support crypto from a technology perspective within Aladdin. We think about being one of the largest cash managers in the world that supported our efforts in stablecoins, which reinforces our enthusiasm in tokenization. So all these pieces are kind of synergistic with each other, and then it helps to have the global platform where you can really focus your efforts on where the commercial opportunity is and where the regulatory environment is supportive.
So there's a lot of work, a lot of money spent on getting to where you are effectively. It's not the brand name as the only enabler. But looking into the future for a minute, crypto is obviously the thing that delivers cash flow at the moment for Blackrock. What do you think is the potential for tokenization versus crypto in the future?
Well, I think what's interesting is sometimes there's been this, what I view as a false dichotomy presented, which is that, in the early days it was, some people said, blockchain, not Bitcoin. And now kind of the new form of that can be tokenization, not crypto. And I think that somewhat misses the point because these things are quite complementary, actually. And, if you think about bringing about a future tokenized state of the world versus, more institutional participation in crypto, which one's really riskier? When you think about it, having a bunch of institutions invest, a couple percent of their assets in this new asset class, which is volatile and risky, high return potential, high risk, but at some small percentage of assets, or migrating tens of trillions in assets to this new technology paradigm. I think when you put it that way, it's obvious that the second one is riskier, right? So that's where crypto actually is starting to serve this function as a valuable gateway for institutions to build comfort in this space and with this technology, dealing with digital asset custody, wallets, blockchain-based settlement, et cetera, that I think is going to prove to be an important catalyst of tokenization. And there, you've seen, some of the dynamic that we've been focused on in our analysis, particularly with respect to Bitcoin. We think there's a misnarrative of sorts in the market, not a great understanding of Bitcoin, a big opportunity for education. We're playing that education role. I think this week was kind of a classic example of that. It would be very hard to make a solid fundamental analysis of why Bitcoin, as a non-sovereign, global, decentralized, scarce asset, is worth less today than it was on Monday because the Middle East is in turmoil, right? And so that delta between what fundamentally makes sense and the way it can be traded on a short-term basis is actually really undermining institutional adoption. And so I think as that gets better understood, it's going to help crypto adoption. Ultimately, it's going to help tokenization adoption.
Okay, and taking things further in the tokenization direction, what would you say is the main economic drivers for tokenization for Blackrock?
Well, I think that for us, it's a story primarily of access and cost for our clients. It's about being able to make more investments accessible to a larger number of investors and to do so at a lower cost. And there's a bunch of reasons that cost efficiency can come about. I think one of the features, obviously, that you get with tokenization, in addition to those two, is the potential for liquidity. To date, we haven't seen that liquidity come to life in a real way, and we can maybe talk about that a bit later on in terms of why that is and how we solve it.
Yeah, well, I guess that's the big thing here. We've got all these catalyst projects downstairs. We've got, obviously, everybody in the room agrees there's a lot going on in the tokenization space, but what do you think would really need to happen for an exponential kicker here, for the whole thing to take off? What needs to come together?
Yeah, I think that you could sort of boil it down to three primary things. In our view, we used to say four, but actually we think that one of the four has kind of been checked off, which is good. One is the widespread availability of custody for tokenized assets in an institutional grade way. So this space needs a number of institutional custodians, ideally both crypto native and those from the traditional space, to make it seamless to be able to participate in tokenized assets, right? Because a lot of institutions are not going to bring on necessarily a new custodian for that, first tokenized asset that they're interested in. There's just a lot of friction and overhead to implement that. So once it's fairly ubiquitous, then it becomes a lot easier. The second is exchange liquidity, right? So there's a bunch of, obviously, projects trying to solve for this, but we haven't yet seen a large incumbent, that's what I think would be valuable for a large incumbent, if there were a tokenized asset trading venue launched on the back of one of those platforms, that would potentially be a real step change in terms of how realizable that liquidity value prop is. And then third, the regulatory clarity, which I think has been talked about a lot, and there's certainly progress on that front. But ultimately, at the end of the day, it comes down to, can we get comfort that a tokenized bond is going to be effectively a bond, tokenized fund, whether that's private, ETF, et cetera, is going to be treated as a private fund, ETF, et cetera. And I think that's coming. The fourth piece, which actually there's been pretty good coalescence around lately, the space, in our view, was a little bit too fragmented to get real adoption in terms of, there's so many asset classes people were excited about. There were 15 different things people were trying to tokenize at once, and that was counterproductive to actually coalescing around one or two or three things where we'd be able to say, here's an asset class, here's a geography where we used to do it on traditional finance rails, and now we do it in all or in majority in a tokenized way. And now there's started to be a little bit more focus there, which is helpful.
And do you think there is going to be one dominant player in this space, or is it going to be an ecosystem of tech companies and service providers?
I think it depends a little bit on the part of the value chain where in certain instances, and we talked about one with custody, the more providers, frankly, the more robust the ecosystem is. There are other places where having a proliferation of providers actually has a fragmentation effect and prevents any one platform from developing the kind of network effects and adoption that are helpful. And so, it's a mix depending on what we're talking about.
And obviously, as you were saying, the secondary market and liquidity is fundamental in terms of one of the key drivers. Do you think there's a role for the legacy exchanges?
Well, that's where I think there's potentially a big opportunity if one or more of those legacy exchanges decided to really make a run at this and have a tokenized asset trading venue. That could have a big leg up in terms of the number of participants, the network effects, and the liquidity that it could attract. And I think once you see for the first time real liquidity in an asset that formerly was not liquid, right, which you haven't really seen at scale to date, but when you have that potential breakthrough, I think that'll be a watershed moment for the industry.
Okay, and I mean, another way that I guess the breakthrough can happen is peer-to-peer trading of digital assets. What's your view on that?
Well, I think that's a little bit further down the track, but it's quite exciting, right? And it's also disruptive in some ways that I think will be healthy in catalyzing attention from TradFi institutions. When you think about tokenization, there's some disruptive element, there's some opportunity element of it for TradFi. When you think about DeFi, there's no one who's not potentially affected in some way from DeFi. And that fear factor tends to be a great catalyst for action. And the most thoughtful institutions will be proactive and try to be out in front of that. Some may just hope it kind of goes away. But DeFi is going to be on a longer time frame. Obviously, there's a more complicated regulatory thing to figure out there, but it's something that we're paying attention to. I know a lot of TradFi firms are.